I just want you to firstly explain to us how successful you feel the Modi government's incentive schemes have been at attracting investment to India, perhaps at the expense of China.
Sure. So, Indian government has been doing a lot of things where we are looking at how do we provide incentives to address, certain deficits that India has in terms of, the ability to import things that, currently we don't have the suppliers of. So we have, very structured way of providing incentives, for example. And I can tell you, some of the incentives that I have seen have increased the exports to the order of 30 to 40%. And we'll continue to look at, what are some of the additional areas and components, subcomponents in electronic space that we can continue to provide. We're also looking at many ways of attracting, R&D experts, looking at growing more of our patent filings. And our goal is, over the last 7 years, we saw 70 billion on an average FDI coming into India. Our goal for the next 7 years is to draw on an average 110 billion per year, which amounts to, roughly $1 trillion plus over the next 10 years. And that's the goal that we are driving, which means we have to work towards growing, at a rate higher than 10%. And to do that, we are doing many things, focus sectors, partnership, all that we can, in addition to the stability that the government is working on.
Well, of course, one high-profile investor that was meant to be setting up shop in India was Tesla, but they've since vanished without a trace. Do you have any concern about the message that sends to other foreign companies that might have been looking to invest in India?
I'm not concerned. Investment is a cycle. There are up times, there are down times. If, one investor goes, doesn't mean others are not. We have Micron, we have Tata with partnership with PSMC. So, there are many things we are doing. Our own automotive industry in terms of export is doing really, really well. So I'm not concerned. Market to me is a sinusoidal curve. It goes up, goes down. What we have to look at the trends. And the trends are giving us very positive message. I really don't see any country showing the growth rate that we are, 7 to 8%. 10 years ago, we were 9th largest economy. Today, we are 5th. Next 3 to 4 years, even if we take humble growth rates, we will become the 3rd largest. Having said that, I want to assure you we are fully aware of what are the changes that we need to make, what are the benefits that we need to provide, and we are working on all that. And in presence of all of that, I am really looking at focus sectors. I don't want to peanut butter myself across every single sector. I'm looking at what are the countries that I want to partner with, what are the focus sectors that we will work towards. And as a result, we have created something we call PM8, Priority Mandate 8. And there are 8 sectors that we are working on, which we believe is going to drive more focus and help us with greater than 10% growth.
Can you tell us a little bit more about some of the countries that you're looking to partner with? And you mentioned more reform is needed. What are you looking at there, particularly in terms of cutting red tape?
There are several countries. If you look at some of the sectors that I highlighted, 8 sectors, I'm looking at what are the countries who are doing amazing in these sectors, who have the technology, who have the IP, partner with them, look at political friendship, look at democratic vision, and partner with these countries. So US definitely is a big, big partner to us in terms of technology. And in fact, there is something called Critical and Emerging Technologies Partnership, ICET, which India and US are working towards. We also have similar partnership with Quad, which is, US, Australia, Japan, and India. Similarly, we have IMEC, which is the Middle East, Europe, Israel corridor. So we are looking at all of these countries who are raising their hands for, larger good, democratic good, and are partnering with India. Nobody can ignore India at this point of time. And I really feel people have what is called fear of missing out in the young people's lingo, because few things. India is seeing 7% growth. India has 500 million workers or resources. India has demonstrated software as national level platforms and the ability to drive fintech revolution through those national level platforms. We are working on health. Similarly, the amount of investment government has made, about 1.3 trillion over the last 10 years in infrastructure, whether it is, air, whether it's road, whether it's rail. And I'm really even proud about the space. So some of these things nobody can ignore. And the last thing, which is very, very important to me, is the youth. India's median age is 28. So with all of these factors that I just talked about, India is seeing the velocity of 7%. What me, my team, and the government is looking at is how do we get the acceleration? With the velocity, we are seeing 7% growth, 7, 8, people can argue. But what we are trying to do is how do we accelerate? So the acceleration needs focus. The acceleration needs partnership. The acceleration needs what is the deficit that we have? How can we address with partnership? And, so therefore, I'm looking at all levers to create this acceleration, which will take us to, perhaps doubling our economy by 2030. And one more thing I can tell you, I relocated from US in 2007. And 2007, I told myself, remember that Indian economy is 1 trillion. Before I knew it, Indian economy became, 2 trillion somewhere around 2013. Yeah.
We're unfortunately running out of time, but thank you so much for joining us. Nivruti Rai, CEO and Managing Director of Invest India there, speaking to us exclusively.